owner, Key Advisors Wealth Management. Thanks for being here. Some of the action we're seeing of late, what do you make of it, and do you see opportunity?
I do. I think there's going to be lots of opportunity, especially as we get closer to the election. I think you'll see volatility pick up. You're starting to see it now with the VIX getting over 20 and kind of staying range bound. And I think these sell-offs can be bought. We certainly have been, because I think post-election, once we get the uncertainty of that behind us, you're going to see a year-end rally that could potentially be pretty sizable, especially for those that are trying to play catch-up for the year. But I think it's going to be the same leaders. You know, our biggest individual stock holding right now is NVIDIA for clients. We are in emerging markets. We bought India yesterday because they've had a sell-off. I think part of that was the rotation to China, but their fundamental story looks really good as well, too. And then lastly, an area that's frustrated a lot of people that we have a position in our small caps. It's given plenty of head fakes, but I think post-election, the markets will kind of digest and say, look, we don't have a recession and the Fed is cutting rates. That's very bullish for risk assets. And so I think the rotation will continue out of defensive names into your higher beta names, and it will ride this sugar high that the Fed is giving us. It will cause bigger problems down the road, but right now we will ride this sugar high as high as it'll go before we look to de-risk. So we're pretty bullish on risk assets, regardless of the volatility here short term.
Yeah, NVIDIA closing in on a record high. I mean, right now we're at 132, up 3.5% today, up for 1 month, almost 25%. So we've seen a lot of volatility with NVIDIA, to your point, but getting closer and closer to those 140 highs. Do you think we'll break the 140 highs soon?
I do. Again, I think a lot of it will be post-election on this, but I don't see how a market goes through all-time highs without NVIDIA participating. And NVIDIA's kind of been range-bound and had a lot of volatility the last few months, and it looks like now it wants to break out. So I think it's going to go, in our opinion, it'll go well through 140. And that's why we've continued to keep that as one of our bigger positions. And selfishly, we hope it does blow through 140. But it'll be volatile, too, just like everything else. I think we just kind of need to close our eyes and wait and see what things look like December 31st, because I think these names we're talking about today will be much higher by the time we get to year end.
Yeah, and the INDA, when you look at that, month to date down about 3%, so came off the highs of 59.49, hits at 57 today. Is that a good way to play India?
It is. That's the way we've played it. India, we put that in place last June. It outperformed the S&P over that 12-month period of time. And once this China trade got hot, we noticed India started to cool off. So yesterday we added to our India position. And we do think that's a great way to diversify into a country that has fantastic growth and inflation that is pre-COVID levels. So they don't have the same fundamental issues on inflation as we do here domestically. So versus just betting all on China from an emerging market perspective, we have a heavier weighting in India. It's less volatile in our opinion. And again, their fundamental story is extremely strong. So I would expect them to rally and beat the S&P from here on through the rest of the year as well, too.
Wow, rally and beat S&P. You know, before I get to the small caps, I do just want to touch on Meta and the triple Qs, because NVIDIA would go into that triple Qs too. Meta as well. Why Meta?
So look, Meta right now, again, they fall in the AI story from a technical perspective. They look really, really strong. And look, we have a lot of ad revenue that they're going to be able to capitalize on this election season. And so I think, again, the fundamental story is really strong. I think they're going to continue to be one of the leaders. And I do think them, along with the QQQ and NVIDIA, fall in that same story where we're going to get that risk-on rally. Tech is going to be one of the leaders. And this is why we have rotated out of our defensive things like utilities and have continued to increase that and go overweight areas that we think the money flows will go into. And Meta checks off every box on those as well.
Right, and so you like the triple Qs along with that. We talked about NVIDIA and SMH. You have also IWM. When you look at the small caps, the Russell 2000, tell me about opportunity you see there and how that fits in, because, you know, we now have over 4% on the 10-year again. Where do the small caps fit in?
So I think we're going to get an inflation print on Thursday that shows a little bit cooling off because they're going to be looking at rearview mirror data. And so we've had a nice spike here in the 10-year. We're probably pretty close to the top, and I would expect the 10-year to come down, and I expect the Fed to cut by 25 basis points again post-election. So we'll be going in to November, December with a time period where we're having the Fed cutting rates, the 10-year coming off of its high, in our opinion, an acceleration of growth, and that's going to bode real well for small caps. Now, if the Fed changes course because inflation reaccelerates next year, that'll be a different story. But right now, I think in that lower rate environment, that's going to be an area that really small caps really thrive in. And so that's why we have not given up on that trade for this year. I think it has frustrated us at times, but I think by the end of the year, again, that will outperform the S&P from now till year end, in our opinion.
What do you think the Fed will do, and what do you think the Fed should do?
I think the Fed got too aggressive with rate cuts by cutting by 50 basis points. I think they'll cut by 25 again in November and 25 in December. The problem that we're going to run into is because of this aggressive cutting. You know, you don't usually see these types of cuts unless there's real problems in the economy. It's very inflationary. And look at what commodities have done since September and October and August. We're looking at oil prices, shipping costs because of what's going on in the Middle East have really gone up. So this is going to be really great short term for risk assets and cause them to continue to go up. But it's extremely inflationary, and I don't think they're going to come close to cutting as much as the market thinks next year, because I think by the time we get the first quarter next year, inflation has reaccelerated to the point where they're going to have to stop the rate cuts and potentially talk about pivoting. And the writing seems to be on the wall. The market won't like that, but the market right now is very short-sighted. And again, we're going to ride that until the data shows otherwise. But everything they're doing is causing prices to go up, and that's why inflation is going to reaccelerate.
All right, Eddie, good to see you. Thank you so much for being on with us today. Appreciate that you're here, Eddie. Thank you.
Thank you
Eddie
so much.
Ghabour, Key Advisors Wealth Management.